Hi and welcome to Swissquote's Daily Market Talk. It's Tuesday, December 9th, as investors wait for the Fed's 25 basis point cut and the outlook for the future policy due to be announced tomorrow. The corporate news are making the headlines with very interesting deals on the wire, including the fight for Warner Bros. And IBM's new strategic AI deal, and also Nvidia's approval to sell its H200 chips to China. So we will talk about what these deals mean for these companies and what they mean for the sectors that they are swimming in. But before we do, please keep in mind that opinions are my own and this is not financial advice. So a Hollywood-worthy drama is unfolding right now around Warner Bros. And who will buy it? Because last week, Netflix made a cash and stock offer of $27.75 per share for acquiring Warner Bros. Studios, HBO, and streaming business. What they want is quite simple. They want high quality and abundant content from Warner Bros. Legacy Hollywood studios. Period. But apparently the threat of a new Warner Bros. Arm Netflix was too strong for Paramount to take, as its legacy business is already being threatened by the strong growth that we see in the streaming business, which is said to be the future of television and which is already heavily dominated by Netflix, of course. And you could see the fear in the stock reaction of Paramount on Friday, which sank 9% after the Netflix deal was announced. And for a good reason, because if we dive into some of the numbers, Paramount, for example, counts less than 80 million subscribers worldwide for its streaming business. Warner Bros. Has around 130 million and Netflix around 300 million. So even though a part of the subscribers overlap because they have multiple subscriptions, and we can make a straightforward addition to see who is going to be bigger after a potential deal, given the significant gap between the business sizes, especially with Netflix, even joining streaming forces together with Warner Bros. Will not make Paramount a huge threat for Netflix. So it's pretty simple. Paramount is fighting for survival in this Warner Bros. Drama. Left with little option, the company stepped up yesterday and said that they would pay $30 per share for the entire Warner Bros. Company. Everything, studios, the streaming business, HBO, and also the cable channels, including big names like CNN and TNT that Netflix does not want. Now, in the first glance, the Paramount's $30 per share offer is higher than the Netflix, but if you add the Warner Bros. Cable business into that mix, a business that will have to fly on its own and get a valuation for itself, well, the comparison is not that straightforward. Paramount CEO, for example, argues that the spin-off is worth around $1 billion for Warner Bros. Investors, which is quite low because Bloomberg Intelligence, on the other hand, argues that the cable channels are worth around $4 billion, which would then make Netflix offer juicier compared to Paramount. As such, some people argue that Netflix offer will remain superior to Paramount's unless Paramount counter bids with a $33 per share offer. Some others believe that the cable TV business is dying and Warner Bros.' ex-cable assets would be better in Netflix hands. Now, from a shareholder's standpoint, Paramount's offer is obviously simple. It is all cash and is for the entire entity, so it could eventually appear more to shareholders as it removes the uncertainty about the valuation of the cable business. On the other hand, a Warner Bros. Paramount deal will generate more synergies because it's pretty much the same business that will be married together and could lead up to around $6 billion in cost savings compared to just $2.5 billion in cost savings for Netflix. But Netflix is not looking for cost savings in this deal. It's looking for content and prestige, while Paramount is literally fighting for its survival in this growing streaming area. But Netflix has deep enough pockets to increase its own bid and simplify. So the deal is not done just yet, and it is even more complicated considering the dinners and golf parties with the Trump family. Trump has close relationships with Paramount's Ellison family, who are the owners of Paramount, and the first son-in-law, Jared Kushner, is involved in the Paramount's financing scheme. So there will be a lot of twists and turns in this deal, but there will probably be less antitrust barriers for Paramount Warner Bros. Marriage than the Netflix Warner Bros. Takeover. And besides the political dimension of the story, a Warner Bros. Deal will make Netflix more dangerous for the entire media space than a simple Paramount Warner Bros. Merger, the type of mergers that we already saw in the media space. So Trump has a point actually when he points at these antitrust issues in the Netflix Warner Bros. Deal, whatever his primary motivations are. So there is no certainty at this point about where the Warner Bros. Saga is going. It will take months to settle if I'm optimistic. But what we know is that Netflix investors are less enchanted for the deal than Paramount. First, a potential deal with Warner Bros. Would shift Netflix focus from its core and juicy streaming business to expensive and capital-intensive one. And two, the Warner Bros. Content is prestigious, it is, but it is expensive to fund, because to fund this takeover, Netflix is assuming over 10 billion US dollar in Warner Bros. Debt, plus potentially tens of billions more in new debt, because you need to have money upfront to make a studio run. That means that Netflix's balance sheet, which has been clean and low leverage so far, will turn into a heavily leveraged one, increasing risks, especially if growth and returns disappoint. A Paramount Warner Bros. Deal, on the other hand, would give a lifeline to Paramount's streaming business and help it survive. What's clear is that Warner Bros. Investors are having the time of their lives, as the bidding could go further up, considering that the Warner Bros. Stock closed yesterday just around $27 per share, is already up from around $7 per share in summer 2024. So who will get Warner Bros.? It's an affair to be followed. It's going to be a lot of ugly politics and antitrust issues into that deal. In other and simpler news, IBM announced to buy Confluent yesterday to add into its portfolio of software products a data streaming company that will allow the AI tools to analyze and act on real-time data, which is without any doubt here create value for IBM in its AI push, because in the AI age, data is everything, and having access to real-time data to make decisions and make the AI tools play on will make a huge difference, obviously, for many business applications. Imagine inventory management for warehouses, smart city applications, traffic control, money transactions, or monitoring a patient's vital data. I mean, every sector needs fresh data, and IBM's Confluent deal actually makes a lot of sense for IBM, where software sales make almost up to half of its revenue. We are around 40 to 45% of the revenue there coming from software. Yet there is always a yet. The deal was received with limited enthusiasm, as it doesn't improve IBM's leverage the investors no longer like, because they are willing to see the return before sending AI stocks higher, given that the valuations already reflect upside potential grandly. So in both cases, what we see in Netflix and IBM case is that investors are not necessarily willing to take on leverage deals. There is just too much leverage in the business right now, especially the AI business. Speaking of which, Nvidia won Trump's approval to sell its H200 chips to China in exchange of a 25% cut in revenue. It's not new, we already knew that. The news echoed positively among Nvidia investors yesterday, that sent the stock price up to test the 50-day moving average. But questions remain, because are Chinese still willing to buy the H200 chips from Nvidia, whereas they now have their own domestic grown chip companies ramping up the chip business there? They have national champions like Huawei, for example, Cambricon, SMIC, and more threads that just went public last week in an IPO with a 500% initial surge in the first day of trading in Shanghai, remember? So all of these Chinese companies have the government backing, and the state-related companies in China are already banned from buying the Nvidia chips, and others are not banned, but Big Brother is watching. So unless Nvidia comes up with a deal to be able to export its Blackwell or Ribbon chips to China, the latest approval may not materially improve Nvidia's fortunes in China, because companies may not be willing to take that risk just for H200 chips, even less so as Trump administration will be pocketing a quarter of the sales directly. Anyway, away from that drama, today the FOMC starts two-day policy meeting, which will likely result in a 25 basis point cut by tomorrow, and probably a lot of diverging opinions as well in the dot plot regarding the next steps from the Fed. Activity on sovereign bonds suggests that lower interest rates from the Fed won't immediately lead lead to lower yields, which will obviously complicate the way that markets feel after the Fed cut off this week. So caution reigns as investors are waiting for how the Fed and the Hollywood drama will be unfolding in the coming days, weeks, and months. So this is all for today. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, on LinkedIn, but also on WhatsApp, Threads, Telegram, and Blue Sky for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.
Trading and investing carry risks, including capital loss. CFDs in digital assets are volatile and not suitable for everyone. Swissquote assumes no responsibility for accuracy or losses from its use. Products and services are offered only where legally permitted.